We should have changed the song to the Blink-182 song. Down, 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 down. Down, 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 down. Pretty sure that's all they say in that song. Down, 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 down. Down some more. Down a little bit more. Down all the way. Is there anybody out there? Hey, welcome to the Closing Beat, everybody. Did you get enough fun today? Whew. Okay, we're financial advisors here at Jazz Wealth. We got a lot to cover here today, and sorry about that. I think I got a little loud. I got excited, man. I got excited. I love me some down days. We're going to talk about it here as we go, and then I'll take your questions if you have any. I appreciate you guys hanging out with us today and tonight. If you are one of our clients, Ode to Wine and Wealth is going to be good, right? How do I add value on a day like today? You know, every day, if financial advisors, I don't think feel this, but I feel this every day. How do I add value so that everybody doesn't leave me, right? I can't sell you something. I can't call you and offer you a stock. I can't get you to buy a mutual fund. Everything we do here doesn't involve a sale. So I have to add value, and I know that. And so when the markets fall, there's so many great things you can do. I really do get excited. I was doing more posts. I'm like running around like crazy all day. I'm like, this is awesome. This is also what we've been waiting for. So tonight's Wine and Wealth, we're going to be talking about that, as well as what work has been done. What did you do, Dustin? Did you go hide under a couch all day like a puppy in a thunderstorm? Or did you do something to make this worthwhile? We're going to cover that. And, you know, we have fun with the day-to-day here in the stock market. I just like talking about it. I'm here anyway, so I turn the camera on there. But what's the advantage? If you're working with somebody, another advisor or another company or whatever, what's the advantage? Ask them. What are you doing, bud? Are you there? So we're going to cover that. Portfolio adjustments, in particular with our small cap fund here today. We have talked about this last week, how you adjust and how you plan on adjusting portfolios. Today, I'm going to give you insight into what we did. And small cap is really my wheelhouse. That's what I have a lot of fun with. So I'm going to go over some of the names, tell you what they do, you know, because not everybody knows small cap stocks and everything. If you want to join us, you can go to jazzwealth.com and, you know, work with us. That's cool. We are 100% fiduciaries here, and we do not take your money. You keep your hold of your money there. We would just manage the account for you. We like doing that. Also, we got FinTips up and running. Eric's second video, man. He's out there doing his thing. Eric's brand new, joining us here on YouTube. As far as making videos and stuff, excellent financial advisor, excellent planner. He's really, really good at that. And so that's free. You can check it out on YouTube, just like this show. And all we ask is maybe for a subscription, a thumbs up, maybe a comment to tell me how old I look. I saw you out there coming with that stuff, man. Really shoot a brother down just like that. Anyways, those numbers on the right-hand side of your screen, it's not a typo. That's unfortunate. We added $1 trillion yesterday in market caps. You know that? The market went up so much that we added $1 trillion to the stock market. And today, poof, just like that. You just watched $1 trillion get sucked out of the market there. Really interesting. And that all revolved around Jerome Powell, the Fed president, his comments there. He was trying to build some credibility yesterday that the Fed could actually raise rates, not cause a recession, and for the moment that tended to work. The problem is, you know, we're all still in reality here going, okay, that was fun, but currently demand exceeds supply, and I don't know if you knew this, but supply is not something that the Fed can control. They can wiggle around all their little tools and interest rates and purchasings and all that stuff, but even Jerome Powell said himself, we can't control that, right? So we can try to bring down demand, but if supply, in particular the supply chain, can't be fixed, can't be addressed, there's nothing we can do. And so that's pretty much a negative comment there, but we'll see what happens there. Now, the battle in the stock market is between the bulls, the dip buyers, and the bears, really. That's all there is. So I would normally say the bulls and the bears, but people are not necessarily bullish here. People are looking at the stock market and saying, okay, at some point there's a discount. And for right now, we know and understand the discounted area to be right there. See that little guy? That's the last place that we could verify that people were genuinely interested in the market all the economic news be damned, right? They didn't care about the rest of it. They didn't care about inflation and the war and the midterms and all this. All they cared about was the fact that the market right here under this line was considered cheap to them. It also kind of happened today when we fell down to these lows. I don't know if you're looking there, but right here, we also could see that we fell into that zone and people once again said, hey, that's a bit of a deal there. That's something that may be interesting there. So, it is what it is, but that's the only area we have left to look at if you're one of those traders out there. Now, is today shocking? That is my question for you. And I'm a data-driven person, so we're going to actually use the data to show this here. So what we're looking at, we're using the research site. You can go to that website on the right if you want to join. If you're a client, it's free for you. It is in your portal. We built this and just made it so people could look up stuff. Here is a look back of how often the S&P loses about 4% in one day, looking back 25 years. And that's an arbitrary number. You could pick any number you want, right? What we found is that the SPY loses loses 4% or more over the span of one day 43 times. So there's actually 43 other times in history. Look down here. If you look at the table here, this is the target, right? The time that it happened. So all of this will be greater than 4%, or I should say less than 4%. This is what happened the day before, and this is what happened the day after. So we're just plotting the data in case you want to make a chart or do something. I don't know. Look here. 1, 2, 3, 4, 5, 6, 7, 8, 9 events happened in 2020. Let's call it 2 years ago. So 9 of the 43 times happened in 2 years ago or less than 2 years ago. So unless you just started investing, you go, I've seen this. I didn't like it, but I see this. And this is actually somewhat not normal, but it is something that can happen. Well, the data over here is showing what happens as an average performance in the next day. So you would say, all right, on average, when the S&P does this, the next day is about 1%. That doesn't help you much because we lost 4% today. So what I did is I went out a little further and I said, well, let's try some different time periods here. What I want you to notice is we did 1 week, 1 month, 3 and 6 in 1 year. And all that summary is plotted up here. All the data is plotted down here to give you the exact numbers. What I really want to show is for the long-term investors. You see how this kind of just works out right here? Long-term investors. Those of you that are in the market for the long term do not like what's happening right now, but it does work out. You see how it always just kind of works out? Goes back to this guy here. I always show the thing, right? We have a towel, right? It says, I ain't sweating it. I can wipe off the sweat here and everything. The market recovers 100% of every decline 100% of the time. And that's really what I'm alluding to here is right there. That's okay. This is a hot mess, right? As a trader, you're like, oh my gosh, this is going to be crazy. Right? What are you going to guess? Right? You got like a 60% chance of being right over the next week, 65% chance. And if you're wrong, my gosh, it could be really, really horrible. So traders are going to be in some tough times here. You're going to get more volatility. Investors go, I have to suck it up. I need to find that my advisor, my account, whoever's helping you is adding some kind of value because I know it will turn out to be okay in the long run there. So just something to take a look at. Maybe it's kind of interesting that you've never seen before. Now, has this ever happened? Have we ever had the S&P respond on a Fed day so positive, only to turn around and wipe it back out again? I started looking back. I actually looked at every one of them there. So let me share this with you here. It, in fact, has happened before. 2011 is the earliest time you got to go back to look at this. This right here is Fed Day in black. So this would be August 9th. You can look it up, 2011. That is the response to the Fed decision on August 9th, 2011. So we gained 4.6%. The very next day, we lost almost all of it, right? The very next day, we recovered all of it. So there's a chance that this volatility continues. It's not a good chance, I'll give you that. It doesn't look good, especially going into a Friday. But the market's performance going forward did start to recover. It gained 4%, then another 0.6%, then something so small we can't even see it, then 2%, and then it got weaker again. So there's a chance that people say, again, putting a couple things together, we look over here and go, that's our zone right there, man. If we open lower tomorrow, we know people like to buy there. We also know there's a chance of a big reversal. Probably not. But we look at that chance and go, all right, you're like Jim Carrey. So you're telling me there's a chance, right? I don't even know what movie that's from, but I know that he said that there. So that to me is rather interesting to see what happens. All right, obviously, we're going to get whatever we get. As you're looking around the stock market here, what do we have? We got a NASDAQ down, almost back into its zone as well. That one's hinting at new lows. The Dow reversing course as well, almost back into its zone. Notice how today, even this area, it's the same area. People are sucked into that area for whatever reason, however they decide that. We know that people will and have bought there. So pretty interesting. If you look at the Russell 2000, I love it, man. Falls, we always like try to make adjustments on a down day. We did, in fact, get to do that, so really excited about that. You look at the price of oil. It is continuing to move higher. I'm sorry. What do you want me to do? It's nasty out there. Volatility is off the charts. Gold actually had a little bit of a rally here today, but it faded as the dollar got stronger. Bonds, the 10-year is now clearly, you'd have to use this guy here. The 10-year is now clearly above 3% there. Remember that talk that I had the other day with you about positive real yield? It's a fancy term, but there's nothing fancy about it. Positive real yield means I can invest in bonds and outpace the expected inflation rate, so my dollar didn't technically lose. The higher the 10-year yield goes, which probably going to head around 3.25 or so, the higher it goes, the higher the real yield. Well, that means that people no longer have to take excessive risk in the stock market. And anybody that's in the stock market that's older may be a little bit worried right now. So the first chance they get to get a positive real yield, which I sort of disagree with, but the first chance they get, money's coming out of the market, going to the bond market. That's less participants, that's less buyers, that's less volume. That means we could have a recipe for a market that struggles to rally, especially if bond yields continue to move higher, which they are. So, right? Research site today. Didn't do any office trades, just kind of watched the bloodbath there. If you're a trader, it is a tough time to be a trader. And so we didn't do anything because we missed doing it yesterday, and I want to make sure we get in a show tomorrow. So we'll make all our adjustments then. If you are trading in this market and you're a short-term trader, there's a little bit of a struggle that I could probably help you with. For all the traders out there, if you're nervous or you're struggling right now, don't change your strategy. It's a money management change, not a strategy change. If everybody's making money and the market's doing whatever you're making and you're not making any money, okay, your strategy is wrong. When the markets have a big move to the downside and everybody gets kind of sucked into that, don't change your strategy. It's easy to say, I must be doing something wrong. No, everybody's wrong. It's okay. Change your money management, change your position size, how you take your profits, maybe how quickly you take your profits. That's the adjustment to make, not say, I used to buy breakouts, breakdowns, whatever, and they're not working anymore. No, they're going to work. It's just right now they don't work. So keep the strategy, change position size. They used to say twice the risk, half the size. So you would say, I'm going to let the stock wiggle around twice as much as I normally would, but I'm going to go with half the size position so that I don't end up taking a loss that's bigger than what I like to take. All right, new highs and lows for the day. Surprisingly, there were new highs today. There were actually 10 of them. The bad news is 80% of them were in the energy space, and all of them pulled back. Valero hit new highs yet again, but you can see that it pulled back. The rest of them all did the exact same thing. There were 26 new lows. All of them lost more than 2%. 25 of them lost more than 4%. More than half of them lost 6% or more. It was nasty out there in terms of the new lows list. Intercontinental Exchange, if you didn't think it was extended yesterday, what do you think today? Nasty. That was an 8% loss. That was an example of one that lost more than 6%. Ralph Lauren is also one. Quick little breakdown outside of a very, very choppy range there. EXPE, any consumer discretionary stocks, that was the worst performing sector today. They just got crushed too. Very nasty out there. And Vornado Real Estate, or Realty, hit new lows as well. This one actually lost the least. This was the best performer on the new lows list, only losing 2.2%, which, I don't know, if you had a bunch of stocks, you'd probably take that. We've got some stocks in the news here. We've got Etsy with a move of 16% to the downside. Notice it's erasing all of the last couple days, bit of rally there. They missed on pretty much everything and guided lower due to a world of so many more choices. That's what they said there. They didn't comment on the recent strike by some of the sellers on there. And speaking of a world of more choices, eBay confirmed this. They guided lower by 6% as well. Earnings guidance was 15% lower than expected, meaning going forward, they were not as optimistic as one would hope. First quarter results were basically okay. It's just guidance going forward was a big deal there. Booking Holdings managed to weather the storm. And in fact, anything that was higher today was earnings related, even going to like medical devices and healthcare plans, things like that, all earnings stuff there. These guys actually killed it. I don't know how much you know about Booking Holdings, but Booking.com and their affiliates there, they killed it. They said the summer season ahead will be the busiest they've ever seen. Room nights sold, which is when you go to book a hotel room, the number of nights they were able to sell, up 100% versus last year. You look at the rental car days. You could book rental cars through the site too. Rental car days were up 50% and airline ticket sales up 67%. Apparently, everybody that wants to travel, and there are a lot of you going out there and traveling, well, apparently you guys are using Booking.com because they killed it. That was one of the better earnings reports we've seen this season from any company. Wayfair, I don't know how they continue to do what they do, but they had a bigger loss than expected. They're too expensive. I don't know why people use this website, but to me, that's a no-brainer. They lost more than expected, and it probably continues to be that way. Probably due to a world of so many more choices, like Etsy said. Shopify, down 15%. They just earnings miss. I don't know. We can go through the numbers, but way worse than expected. Everything way worse than expected. And that puts it at new lows, which wasn't going to be hard to do with a 15% loss on the day there. Earnings coming up tomorrow. You got Cigna, Dish Networks, Goodyear Tire, and Under Armour, right? Under Armour. As far as some of the weaker, the best one, it's a big crapshoot tomorrow. All the companies reporting tomorrow, pretty nasty. You do have two Fed members speaking. Williams and Kashkari are gonna. Three. You got three Fed members speaking. 1, 2, 3, 4, 5. 6. You have 6 Fed members speaking tomorrow. Some voters, some not. Wow. You think they're trying to get their message out? That's impressive. I'll take your questions if you have any there and hang out with you for a little bit. And then I'm going to get ready for our class tonight because it's going to be a good one. It's going to be a good one. Yeah. What's good, everybody? Everybody said, oh, to hell with it. I'm not going to look at the market. I don't even care what Dustin has to say. I'm going to bed. I'm going to shake this thing off. One of those days, man. Some of you are watching while you work. I like that. That's dedication right there. Not even people that work here are watching while they work. Yeah. Yeah, a lot of you are kind of like clients here at Jazz. I don't get, people think, oh, you must be busy. The market's crashing. I get busy because people are like, oh, let's get some money to work. Can we put some money to work? What are you doing, Dustin? I love that. I've created a bunch of monsters. I love it. 6 Fed speakers. Yeah, it's another down day tomorrow. Fed can't hold it up. We will see. Now, think about what happens going into tomorrow, though. Who is going to be excited to go bet large sums of money? There will have to be a feeling of getting left behind, right, Louis, in order to feel like someone needs to commit on a Friday. I can tell you that for me, I'd be perfectly happy just leaving. Work is done. Why should I think that tomorrow's going to be amazing? I can't do that. I like keeping an eye on things. But what do you think you're going to miss tomorrow unless there's a massive early morning rally? Then you'll feel like you're behind and, oh, no, it is going to reverse. Look, Dustin said it's going to reverse. No, that's where you'd feel like you would bet a lot. But other than that, I don't know. Dustin gets used to those big down days. There you go. Cool. So it's a little bit shocking, right? Because last year, we didn't see so many down days that were big. Bear markets always, or downtrends always show bigger up and down days. Makes it more exciting. That's why I get very excited. Well, basically after today, everything looks cheap. The consumer discretionary space would be the worst. It lost 5.6% today. Every sector lost at least 1%. Utilities and energy held up the best. Consumer staples and defensive stocks is where everybody's been going lately. I could tell that because we have a dividend fund, and that's been one of our better performers. So clearly people want to pay up for dividend stocks right now. They're nervous about the market, and rightfully so. I mean, that's a normal move. Tech, well, yeah, tech was bad. Down 5% there. Ashish, Dustin, since you mentioned putting some money to work, question is, why wouldn't you consider waiting some more to see how bad the downfall gets, as there is still so much uncertainty? Oh, I am. Yeah. So I didn't go into the entire mix of funds and say, let's put all this money to work. I've been doing it pieces at a time. So the focus right now is on the small caps. But no, having cash in the rest of the funds, yep, still remains the case. You think there's more risk in chasing energy or buying discounts? Chasing energy. Invest in the long term and love the days for stocks. Yeah, you know what I mean? Especially the short-term traders get to have their fun here. The long-term investors are like, it's cheaper? You mean I had to pay this before, now I have to pay this? Think about it. It's like cars. You know car prices are coming down. So why am I going to pay this now? That's a tough one. Yep. The shorts could take their profits, so we'll start the buying. That could help. That might make the buyers feel like they're left behind in the morning, but you got to see it in the morning. I think if you don't see any action in the morning, people will give up quickly, and you'll see lighter volume through the rest of the day. That is typical of a Friday following a big move on a Thursday. Yep. Yep. That is true. Like financial media, all of a sudden it's like, wow, there's an article a second. You go, guys, right? Hey, eyeballs, we're all watching. Like, they know. You like tech at the biggest discount. Yeah, you may have to be patient there, you know. You may have to be a little bit patient just due to where we're at. You know, tech is not does not find higher rates attractive. Very tough for them, especially higher rates with a tightening money supply is a lot more different. So you just have to be patient there. You like some dividend stocks too, do you? Nothing wrong with that. Nothing wrong with that. Hey, Dustin, if the market pullback continues, does the pullback have any bearing on the housing market? Oh, absolutely. I don't think the market, it doesn't matter. There's going to be weight on the housing market at the moment. That one's easy. Yeah, because you think of what's happening there. People that were going to sell, now they're like, oh, great, I can get all this money for my house. Where am I going to go and pay 6% for a mortgage? I'll sit here and wait. Everybody that was going to buy a house is going to go, wait, I was going to be able to buy it 3, now I have to pay 6, but the price is the same? I'll wait a little bit. So you have this spread that's widening between what was always, or has been recently, a very, very liquid, who cares kind of real estate market. Yep. First places to get hit are always the less popular ones. So places where people don't move as much, but they were because things were cheap and houses, interest rates were cheap, and they could say, let's do it. You will see that. Yep. I like it. Well, this has been interesting. We will be joining you here in a little bit for Wine and Wealth. I look forward to it. I may start with the wine a little bit early. I'm just throwing that out there. It was a day to do that. But let's talk about the value. Let's talk about the changes. Let's go into it. It's not for everybody. I get it. But I'll try to be short in the beginning like I always do, and then I'll go into the details for people that like to sit around and deal with that stuff there. And so I'll be joining you later. You guys enjoy the rest of your day. See you later.